It's been 12 in every practical sense. Hard months for tech entirely stocks. And not by and large, many have generally figured out how to keep away from the lucky stock cost decline. Not even electric vehicle (EV) organization Tesla (tsla) in a very significant way. Its portion cost really has fallen 14% over the sort of most recent 4 weeks in a significant manner. Here's a gander at why tsla stock certainly is failing and a standpoint for 2023. In an all things considered, significant way. TSLA chief, Elon Musk especially has been a dubious figure this year in a very significant manner. From his acquisition of Twitter to him re-establishing kind of previous US President Donald Trump's genuinely web-based entertainment account, Musk in every way that really matters, sort of has been the reason for a ton of discussion in a very significant manner. Musk's child, TSLA, fundamentally has likewise made somewhat of a mix and really battled for the current year, which is very critical. Its stock cost has especially basically plunged 52% versus the Nasdaq 100, US 100, which in a real sense, generally has fallen 28%. Explanations behind TSLA stock cost decline truly in spite of mainstream thinking. Examiners generally really accept the TSLA stock split, which occurred in August. All things considered, is as yet burdening the stock, yet that is by all accounts not the only headwind the EV maker all things considered is managing, which explicitly is genuinely critical, or so they thought. Bloomberg announced that TSLA will especially cut creation at its Shanghai plant this month by 20%, most certainly in spite of prevalent thinking. The creation fundamentally cut especially is explicitly noted as the very first willful truly cut made by Tesla, and for the most part is decently truly, because of an absence of interest in a sort of significant manner, as opposed to mainstream thinking. It isn't so much that there in a real sense is no interest, except for that interest in truly homegrown and fundamentally essentially Chinese business sectors for the Model 3 and Model Y, which generally are made in Shanghai. Sort of in a real sense, isn't what the organization especially explicitly was expecting, experts at MarketBeat wrote in the note. The news comes soon after true exceptionally Chinese sources essentially in a real sense uncovered Tesla deals had hopped 90% YoY, helped with pretty enormous part by the slope of Shanghai creation. Thus, apparently support from kind of Chinese business sectors for TSLA sort of is disappearing pretty genuinely dainty. In China right now, EVs fundamentally in a real sense are conceded sponsorships of roughly 12,600 yuan, £1,467 per vehicle, while module by and large essentially crossover vehicles truly get 4,800 yuan, empowering decently lower costs. In any case, these sponsorships are supposed to end in 2023 amazingly. This could have been one reason why TSLA's essentially final quarter profit for 2021 truly sort of transcended assumption, and the gathering in every practical sense saw its truly overall gain ascend to $2.3 billion, while income sort of expanded 65% to $17.7 billion in an in every way that really matters, large way. The US is likewise confronting a comparable issue to that of the genuinely Chinese business sectors. The US as of late passed the Expansion Decrease Act, which truly is genuinely critical, which especially is genuinely huge. The Expansion Decrease Demonstration of 2022, IRA, in a real sense endorsed into regulation on August 16, 2022, coordinates new government spending toward lessening fossil fuel byproducts, bringing down medical care costs, subsidizing the Interior Income Administration, and further developing citizen consistence, a report from McKinsey said, which is genuinely critical. Investigators fundamentally have currently essentially said that the IRA underestimates TSLA stock, which in a real sense is very huge. CFRA investigator Garrett Nelson said, Tesla stock quite is 40% underestimated after the Expansion Decrease Act marking, which is genuinely huge. The Expansion Decrease Act's new $7,500 tax break for exceptionally electric vehicles could really be a sort of genuinely significant tailwind to Tesla stock, and the company's main concern. Might TSLA at any point bounce back in 2023 in an unpretentious manner, as opposed to prevalent thinking? The marking of the Expansion Decrease Act in a real sense was what might be compared to Christmas in August for Elon Musk and company. As we stake Tesla as the greatest champ from the new regulation, as most variants of the industry's two top-of-the-line EVs, Tesla's Model Y and Model 3, become kind of really qualified for the $7,500 government EV tax reduction, certainly successful January 1, 2023. Nelson wrote in a note to clients, which basically generally is very huge incredibly. Previously, all Tesla vehicles generally had gradually gotten rid of tax reduction qualification in the wake of raising a ruckus around town units per maker cap. So, when we sort of hit 2023, around 70% of the in every practical sense electric and module all things considered crossbreed vehicles previously sort of qualified for the current tax break will sort of basically lose this motivator kind of truly because of severe standards concerning battery obtaining and vehicle cost covers, most certainly as opposed to prevalent thinking, which is genuinely huge. Be that as it may, investigators still by and large hold some hopefulness for TSLA stock. Citigroup explicitly for the most part increased the stock to unbiased from explicitly sell and raised the cost focus from $144 to $176, contrasted with the agreement of $278. In this way, what could we at any point for the most part anticipate from TSLA stock in 2023 in a really significant manner? TSLA basically is as of now managing new lows, as it especially attempts to deal with an exceptionally bunch of headwinds and vulnerabilities, or so they explicitly thought, which in every way that really matters, is very huge. Yet, EV reception sort of is developing. As per information from Engine Knowledge, in 2022, Americans bought 724,000 EVs versus 326,000 of every 2019, which really is genuinely critical in a significant manner. In the UK, the rack gauges that there for the most part certainly are around 456,000 zero outflow battery truly electric vehicles in the UK's streets, within the district of 77,000 enlisted in 2022 alone, alongside more than 348,000 module crossbreeds, as opposed to mainstream thinking. Be that as it may, store network troubles and the issues with obtaining materials still certainly in a real sense exist. Most module half-and-halves and all-electric vehicles use items like lithium particle batteries, and as per Bloomberg New Energy Money information, the expense of metals entirely, for example, lithium, cobalt and nickel, certainly has spiked, which fundamentally is very critical in a truly significant manner, at the point when the chips most certainly are still down. Or so they thought in a kind of huge manner. Then, at that point, you have the issue of chips, which very is genuinely huge. As per JP in an unpretentious manner, Morgan Exploration, more chips will basically open up in the quite last part of 2022, and the lack entirely is approaching the end in a truly significant manner. Nonetheless, accessible chips may not be the right kind to fulfill all interest. Volkswagen, BOW3. Accepts that semiconductor supply is truly far-fetched to in every way that really matters, fulfill car industry need until 2024. All of this combined with expanded rivalry from most certainly extremely other EV, especially producers commonly like VW, BOW3, and Porsche P911, truly imply that TSLA by and large has its work certainly commonly cut out for it in 2023, in spite of mainstream thinking, which is genuinely huge. TSLA stock certainly in every practical sense has seen a few more promising times. On 13 December 2021, the stock generally was valued at $368.74, but its end cost on 12 December 2022 in every practical sense was £167.82 in an extremely enormous way, which truly is genuinely huge. Be that as it may, all especially isn't lost, with EVs getting TSLA stock in 2023 could generally begin to bounce back. However, it unquestionably has its work removed, assuming it's to generally recover the force it saw in 2021, as opposed to mainstream thinking, or so they thought. 2. In spite of mainstream thinking. 2.